Hi, I'm Stacy Schmidt with this week's PennEnergy News video update. Oil prices briefly retreated Friday morning after a massive earthquake and subsequent tsunamis hit the eastern coast of Japan. Measured at an 8.9 on the Richter scale, the earthquake has been blamed for hundreds of deaths, and a number of refineries in Japan are closed. One is on fire at this point. Oil on the NYMEX retreated below the $100 mark on reports that the refineries were closed, but rose again soon after. With a reported 11 nuclear power plants closed, Japan will likely need additional hydrocarbons in the coming weeks as it works to get alternative power sources back up and running. Additionally, tsunami alerts have been posted for 20 other countries, including Russia, South America, and Hawaii, and the West Coast in the U.S. The price of oil has been trading as high as $105 on the NYMEX due to supply constraints in the Middle East and North Africa. Violence in Libya has caused the OPEC nation to shut in the majority of its oil production, and escalating unrest in other Middle Eastern and North African countries have threatened oil supply to the rest of the world. In shale news, South Africa's Sasol has committed another $1 billion to acquire a stake in Talisman Energy's Montney Shale acreage in Canada. Sasol is gaining a 50% non-operated interest in the Cypress A acreage, in addition to the Farrell Creek assets in which the company has already gained interest. Talisman and Sasol are planning an integrated development of the Cypress A and Farrell Creek assets. While gaining reserves through the acquisition, it is presumable Sasol is also interested in gaining shale development experience to take back to South Africa, where shale is projected to be contained in the Karoo Basin. Spain's Repsol has invested some $768 million to obtain interested exploration blocks in Alaska's North Slope. Gaining the interest through a joint venture, Repsol sees great potential for the blocks to contain oil because of nearby oil-producing fields. Although oil-rich, Alaska's production has waned in the last few years due to reduced drilling and natural formation depletion. In Mexico, Pemex has officially launched the first licensing round in the country since the 1920s. Pemex is offering 3 onshore exploration and production licenses in southern Mexico, each with mature fields from which the company hopes to increase production. Although much smaller than anticipated, the lease sale represents a major shift for the hydrocarbon-rich nation, which has had legislation blocking outside firms from developing oil and gas in Mexico. Additionally, Pemex reported starting drilling on its first Eagle Ford Shale exploration well this week. Following a 17-stage frac, Pemex tested dry gas from the well. A prolific formation in South Texas, the Eagle Ford Shale in Mexico may also hold rich liquids. In Canada, Apache and EOG Resources have taken another step toward developing the Kitimat LNG facility on British Columbia's west coast. KBR has been awarded the FEED contract for the planned liquefaction and export facility that will process expected natural gas production from the Horn River Shale. Opening up new international markets for Canadian natural gas, the Kitimat LNG export facility will also include a nearly 300-mile pipeline to connect the field with the coastline liquefaction and export facility. Project partners need firm LNG agreements from buyers before making a final investment decision on Kitimat. Thank you for joining us this week for PennEnergy's weekly video news update. For these stories and more, please visit PennEnergy.com. For PennEnergy, I'm Stacy Schmidt.